What if I told you that political power could be your key to financial growth in 2025? With Donald Trump back into Oval Office, markets are already responding to his pro-business agenda. Love him or hate him, you can't ignore the market trends sparked by his presidency. Today, we're diving into 3 ETFs that are primed to soar during Trump's second term. From energy dominance to military expansion and infrastructure spending, we'll show you how to position your portfolio for maximum gains. Stay tuned. This could be the opportunity you've been waiting for. During Trump's first term from 2017 to 2021, the U.S. stock market experienced significant growth. The S&P 500 climbed nearly 68%, driven by tax cuts, deregulation, and a booming energy sector. His landmark policy, the Tax Cuts and Jobs Act of 2017, reduced the corporate tax rate from 35% to 21%, aiming to boost corporate profits and encourage investment. Now, in 2025, with Trump back in the Oval Office, investors are eagerly assessing which sectors will see similar benefits. Let's break down the 3 ETFs that could rise under Trump's leadership. Number 1 is XLE Energy Select Sector PDR Fund. During Trump's first presidency, energy independence was a top priority. The administration approved major projects like the Keystone XL pipeline and rolled back regulations that restricted drilling. Between 2017 and 2020, U.S. crude oil production surged by nearly 50%, hitting 12.8 million barrels per day. XLE, which includes energy giants like ExxonMobil and Chevron, benefited from these policies in the past and could do so again. ExxonMobil and Chevron are already cleared of FTC antitrust concerns. With rising oil prices and ongoing global supply chain issues, increased domestic production could boost the earnings of energy companies. As of 2025, XLE offers a dividend yield of 3.29%. If Trump's energy policies encourage new drilling permits and infrastructure development, XLE could experience another significant rally. Additionally, the global energy crisis in recent years has set the stage for increased domestic production. If geopolitical conflicts persist, U.S. energy companies may experience sustained demand, giving XLE the potential for steady, long-term growth. Number 2 is ITA, iShares U.S. Aerospace and Defense ETF. Let's talk about defense, a sector that historically thrives under Republican leadership. During Trump's first term, the defense budget hit $718 billion in 2020, marking a significant increase compared to previous years. ITA tracks major defense contractors, including Lockheed Martin, Raytheon, and Boeing. Trump's emphasis on national security and military readiness led to several lucrative contracts for these companies. One notable example, in 2018, Lockheed Martin secured a $34 billion deal to produce F-35 jets for the U.S. military. With ongoing geopolitical tensions in 2025, increased defense spending is expected. The ITA ETF gained over 40% during Trump's previous term, and with similar conditions, it could replicate that success. Holding ITA in your portfolio could provide exposure to long-term growth and potential dividends. Picture this: a new wave of military contracts for advanced weapon systems, fighter jets, and cybersecurity projects could drive ITA's growth as global conflicts and defense priorities escalate. As countries continue to modernize their defense capabilities, ITA's holdings in aerospace and advanced technologies may also benefit from international contracts. Raytheon, for example, recently announced a multi-billion-dollar missile defense deal with the Middle East. Number 3 is VNQ, Vanguard Real Estate ETF. Now let's discuss infrastructure and real estate. During Trump's campaigns and his first term, rebuilding America's infrastructure was a key promise. Although several proposals faced political roadblocks, a renewed focus in 2025 could change the game. His administration previously proposed large-scale infrastructure bills aimed at repairing highways, bridges, and public buildings. VNQ offers exposure to a diverse range of real estate investment trusts, including commercial properties, residential housing, and data centers. During Trump's first term, REITs benefited from tax breaks under the 2017 Tax Cuts and Jobs Act, which lowered corporate taxes and spurred investment in real estate development. With a renewed push for infrastructure spending, VNQ could see strong gains as public and private sectors invest in development projects. Imagine this: a $1 trillion infrastructure package that fuels construction projects nationwide. As developers build new residential areas, office spaces, and logistics hubs, VNQ's underlying assets could surge in value. Additionally, as the demand for data centers and logistics hubs grows due to e-commerce expansion, VNQ's diversified holdings may provide consistent returns even during periods of market uncertainty. While these ETFs have strong potential, it's important to consider the risks. Trump's policies could face opposition from Congress, delaying implementation. Additionally, energy investments could encounter resistance from environmental activists, and defense spending may be constrained by budget negotiations. However, ETFs provide a diversified approach to investing. Instead of relying on individual companies, you gain exposure to entire sectors, which can help mitigate some risks. Diversification within VNQ's real estate holdings, for example, means that losses in one area could be offset by gains in another. It's also important to watch global developments, such as oil price fluctuations and defense budget allocations, which could impact the growth trajectory of XLE and ITA. To recap, here are the 3 ETFs poised for growth during Trump's presidency. XLE for the energy sector, driven by domestic production. ITA for defense spending and government contracts. VNQ for real estate growth fueled by infrastructure investment. Each of these ETFs taps into key policy areas that are expected to thrive under Trump's leadership. Now it's time to do your homework and decide which fits your strategy. If you enjoyed this breakdown, hit the like button and subscribe Finance Flowchart for more investing insights. Let us know in the comments which ETF you think will be the biggest winner in 2025. Don't forget to check the description for links to the sources and screenshots of the data we discussed today. Thanks for watching and happy investing.